The signs are everywhere, but most people don't see them, at least not yet. That's how it always starts. Before every major financial downturn, before every crash that reshapes lives and fortunes, there are signals flashing like warning lights on the dashboard of the economy. The problem is people tend to ignore them. They tell themselves, it's just a rough patch, or things will turn around. History tells a different story. Right now, if you look closely, you'll see those signals blinking brighter than ever. Inflation has stretched families thin. Interest rates have climbed higher than most expected. And consumer debt is piling up like dry kindling in the hot sun. You don't have to be an economist to know that when too much pressure builds, something eventually breaks. It's not a question of if, it's a matter of when. Take a look at how people are living. The average American is no longer spending because they want to, they're spending because they have to. Essentials, food, housing, transportation are taking bigger bites out of their paychecks. Credit card balances are skyrocketing, not because people are careless, but because they have no choice. Savings accounts that were once padded with stimulus money and pandemic-era cash reserves are now shrinking at an alarming rate. When people stop spending freely, businesses feel it, and when businesses feel it, layoffs follow. It's a chain reaction, and we've seen it before. Remember 2008? People thought the housing market could never collapse. They believed prices would just keep going up, that debt could keep piling on forever. Then, seemingly overnight, everything fell apart. The warning signs were there long before the crash, but too many ignored them. Banks were giving out loans like candy at a parade. Consumers were taking on debt they couldn't afford, and investors were blindly chasing profits without considering the risks. By the time reality hit, it was too late for most. Now, look at where we stand today. Home prices are again at record highs, but affordability is worse than ever. Mortgage rates have more than doubled in a short period, and people who bought at the peak are already feeling the squeeze. Commercial real estate, especially office buildings, is sitting vacant in major cities, waiting for the next shoe to drop. The stock market, despite its recent highs, is built on fragile optimism, and optimism alone doesn't pay the bills. Meanwhile, government debt has soared to levels that should concern everyone. Trillions have been printed, borrowed and spent in ways that cannot go on forever. Interest payments on that debt are climbing, and history has shown that when governments spend beyond their means, there's always a reckoning. The cracks are forming, just like they did before every major financial crisis in history. The banking sector is feeling the pressure too. We've already seen regional banks struggle and collapse in the past year. And the big players aren't immune. Liquidity issues, bad loans, and over-leveraged institutions are hiding beneath the surface, just waiting for the right trigger. It's eerily familiar to past crises, and yet people are still telling themselves that everything is fine. The reality is markets move in cycles. Booms lead to busts, and excess always leads to correction. Every great financial storm in history started with a few clouds on the horizon, and right now those clouds are gathering fast. Crashes don't send out invitations. They don't show up with a polite knock on the door. They come fast, they come hard, and they leave millions in shock, wondering how they didn't see it coming. That's the brutal nature of financial collapses. They don't wait for permission. They strike when people are at their most comfortable, when confidence is at its peak, and when the belief that this time is different has settled deep into the minds of investors, businesses, and everyday people. History is filled with moments where people thought they were safe right before everything fell apart. The stock market crash of 1929 came after a period of euphoria where stocks were skyrocketing and people believed prosperity would never end. The dot-com bubble in the late 90s had the same effect. And of course, in 2008, the housing market felt like an unstoppable force, with home prices climbing higher and higher until suddenly they weren't. Every crash follows the same pattern. Confidence turns into complacency, complacency turns into risk-taking, and risk-taking turns into disaster. Right now, we're seeing that same dangerous confidence. The stock market is riding high, even though the underlying economy is struggling. People are still spending, but much of it is fueled by credit, not actual wealth. Companies are still hiring, but cracks are forming in the job market, with layoffs quietly increasing. It's the illusion of stability, the calm before the storm, and that's what makes it so dangerous. Look at what's happening in the financial system. Banks have already shown signs of weakness. Just last year, we saw multiple regional banks collapse, sending shock waves through the economy. The government stepped in to prevent panic, but the issues didn't go away. Many institutions are still carrying bad loans, still overexposed to risky assets, and still relying on a fragile system that can break at any moment. The reality is the financial system is built on confidence. Once that confidence is shaken, everything starts to unravel quickly. And then there's debt. Governments, corporations, and consumers are all carrying record levels of debt. For years, low interest rates made borrowing cheap, and people took full advantage of it. But now, rates have risen, and the cost of that debt is becoming unbearable. Businesses that took out loans at low rates are now struggling to refinance at much higher rates. Homeowners with adjustable rate mortgages are watching their payments rise. Consumers who use credit cards to get by are now drowning in interest charges. When the pressure becomes too much, defaults start happening. And when defaults start happening, the dominoes begin to fall. The speed of a crash is what catches most people off guard. One day everything seems fine. The next, headlines are screaming about major financial institutions failing, markets are plunging, and people are scrambling to understand what just happened. That's how it always goes. The illusion of stability lasts until suddenly it doesn't. And by the time most people realize what's happening, it's too late to do anything about it. My friends, let me tell you something. We are standing at a crossroads, and I can feel it in my bones. The same way you feel a storm coming before the first raindrop falls. Something isn't right. The air is different. The numbers don't lie, and neither does history. The world has seen times like this before, and every time people who weren't paying attention paid the price. You don't need a degree in economics to see what's happening. You can feel it at the grocery store. You can see it in the housing market. You can hear it in the worried voices of hardworking people trying to make ends meet. The foundation beneath us is trembling, and if we're not careful, if we don't prepare, many will be left picking up the pieces when the dust settles. Crashes don't send invitations. They don't knock on the door politely. They come fast, they come hard, and they don't care who you are. But history has also taught us something else. Every storm brings opportunities for those who are ready. And my goal today is to make sure that when the dust clears, you're not among the ones left wondering, how did I not see this coming? Because, my friends, the signs are all around us. And ignoring them, that's not an option. The first signs of an economic downturn never come from Wall Street. They don't come from government reports or financial analysts on television. They come from the people living paycheck to paycheck, the small business owners struggling to keep the lights on, the families making tough choices at the grocery store. Long before a financial crash makes headlines, it's already being felt on Main Street. Right now, the average American is feeling it. Prices have gone up on everything: food, gas, rent, medical bills. Wages, they haven't kept up. People are working just as hard, if not harder, but somehow their money doesn't stretch as far as it used to. Savings, which were briefly boosted during the pandemic, have now been drained. Credit card debt is at an all-time high, not because people are living extravagantly, but because they have no other choice. When your paycheck no longer covers the basics, where else do you turn? Homeownership, once the foundation of the American dream, now feels out of reach for millions. Mortgage rates have doubled, home prices remain stubbornly high, and young families who once thought they'd be able to buy a house are now stuck renting indefinitely. Meanwhile, landlords are raising rents to cover their own rising costs, putting even more pressure on tenants who are barely holding on. And then there's the job market. On the surface, things still look solid. Low unemployment, job openings still posted. But beneath the surface, cracks are forming. Layoffs are increasing in tech, finance, and retail. Companies that overhired during the boom years are quietly downsizing. And those lucky enough to keep their jobs are finding that their paychecks don't go as far as they used to. People are feeling squeezed from every angle, and that's the biggest warning sign of all. When everyday people start making trade-offs, choosing between groceries and gas, skipping doctor visits, cutting back on things they once considered necessities, it's only a matter of time before the broader economy follows. Because when consumers stop spending, businesses suffer. When businesses suffer, layoffs increase. When layoffs increase, the cycle accelerates. History tells us that crashes don't start with the wealthy, They start with the working class. The people who don't have stock portfolios to fall back on, who don't have massive savings accounts or real estate empires, they feel the pain first. They bear the brunt of the storm. And by the time the financial elites start to feel it, the damage is already done. Right now, that pain is growing. And if history is any guide, it won't be long before the rest of the economy catches up. Every financial crisis in history has left behind two kinds of people: those who were crushed by it and those who use it as an opportunity. The difference between the two isn't luck, it isn't privilege, it's preparation. Crashes don't just destroy wealth, they transfer it. When markets fall apart, when panic sets in, when people sell at the bottom out of fear, someone else is on the other side of that trade. When businesses collapse under the weight of bad decisions and excessive debt, someone is there to pick up the pieces at a discount. When assets go on fire sale, those with cash, knowledge, and patience step in and build fortunes that will last for generations. Think about the last major crashes. In 2008, when the housing market collapsed, those who panicked lost everything, but those who saw what was happening and positioned themselves correctly bought real estate for pennies on the dollar. Stocks were being dumped in fear, but smart investors were buying up valuable companies at a fraction of their worth. The same thing happened in the dot-com crash. The same thing happened after the Great Depression. The same thing will happen again. Right now, most people are focused on survival, and for good reason. When times get tough, the natural instinct is to pull back, to play it safe, to hold on tight and wait for the storm to pass. But the truth is, the biggest opportunities don't come when times are good. They come when fear is at its peak, when uncertainty is everywhere, when people believe things will never get better. That's when the real money is made. Assets that seemed overpriced just a year ago may soon be selling for a fraction of their value. Businesses that were too expensive to buy into may become affordable overnight. Real estate that was out of reach may suddenly become a bargain, but only for those who are ready, only for those who have positioned themselves to take advantage of the chaos rather than being consumed by it. Most people will wait until it's too late. They'll wait for someone to tell them it's safe, for headlines to turn positive, for the economy to stabilize. But by then, the best opportunities will be gone. The people who saw the signs, who prepared, who acted when everyone else was afraid, they'll already be ahead. And when the dust settles, they won't just have survived the crash, they'll have come out stronger than. Most people wait for certainty before they act. They wait for someone on the news to say, now is the time. They wait for the economy to stabilize, for the markets to calm, for someone to give them permission to move. But by the time that happens, it's already too late. The best opportunities are gone, the damage is done, and the people who prepared early are the ones standing tall. Right now, we are in the danger zone, the time when everything looks stable on the surface, but the cracks underneath are widening. If history has taught us anything, it's that once things start unraveling, they move fast. The people who act now, before the storm fully hits, will be the ones who come out ahead. Those who wait, they'll be the ones scrambling, caught off guard, wondering how they didn't see it coming. Look at the warning signs. The markets are inflated, consumer debt is at record highs, interest rates have climbed, and businesses are already starting to feel the pressure. The average American is living paycheck to paycheck, relying on credit cards just to cover basic expenses. It doesn't take an expert to see where this road leads. The people who succeed during times like these aren't the ones who panic, and they aren't the ones who sit on their hands. They are the ones who move before the headlines confirm what they already knew. They cut unnecessary risks, they build up cash reserves, they prepare for the opportunities that come when fear takes over. They don't wait for permission because they know by the time the masses react, the window has already closed. This isn't about fear, it's about being smart. It's about understanding that the best time to prepare for a storm is before the clouds break open. The people who recognize this now, who take action today, will be the ones who not only survive the coming crash, but emerge from it stronger, wealthier, and more secure than ever before.